We're going to stay focused on Bitcoin. Why? Because it's the master price indicator that dictates the rest of the market. Right now, it's in this really uncertain zone, but we are still maintaining the position on the downside. And today, we're going to look into why. If you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir, the award-winning author of The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for over 15 years now, featured in the best-selling book, High Probability Trading Strategies, back in 2008. So let's dive in. So there's a few things I want to jump into today. Firstly, just a quick reminder, this is a YouTube video I posted on September 14th, right? And we called this top before that, and we said, look, this video was Bitcoin, is this the right time to take profits, expect more movement to the downside? Why? Because we had different elements of the charts telling us different things. One, the weekly momentum was down. There was a particular pattern, and I just said, look, this pink box up here, it's a good profit taking opportunity before we expect further downside. Now, we're going to jump into a live chart right now where what we'll see is that further downside did take play. It was this part here. So the real uncertainty is what the heck is happening over here in this zone. Is the momentum going to be on the upside or the downside? Because we're in this kind of no man's land zone. So that's what we're going to cover today based on Elliot wave and Fibonacci analysis, how to read the psychology of the market. And if you haven't already, do take my free Elliot wave and Fibonacci masterclass that just shows you how this stuff really works. So first of all, on a macro picture, I mean, still staying focused on the immediate time frame, my bias is that we should expect further downside movement. But today I'm going to show you exactly why. The metric that will change my opinion is if the market moves above this point. If Bitcoin's price goes above 48,300, then we need to reevaluate. But until that moment, everything still looks like further downside movement. So the first piece of information I want to bring to your attention, you would have seen this in my previous videos, this is a weekly chart now, is the weekly momentum. It is still bearish. Even though it's in the oversold zone, we should expect 1, 2, maybe even 3 weeks of sideways to down movement, right? Especially when the blue line crosses over the red, that will tell us, it will normally coincide with the low of the correction. Then we want to look at what the heck does this look like right now? What is going on here? What is this pattern? So I'm going to really articulate it really clearly, or as clear as I can. The first part that I want to focus on, if I bring this up here, is this movement to the downside. What I'm anticipating this to be is a wave one. Now, again, just a quick reminder, we are in the probabilities game, not the certainty game. So we have to go with the edge. What is the probability stating? And then we have to go with that probability. That's the whole art and science of trading and investing. So we're looking at this as a wave two. We've had this movement to the downside. What I'm seeing this as is a potential beginning of a wave three. When I say beginning, what I mean is, if I just click this here, wave threes tend to unfold into a wave one, ABC of a wave two, a wave three, some type of wave four, and then a wave five. All right, so I am looking at the market from, this is the angle that I'm looking at it from. If this is the case, it might not be as deep as this. So, it might be something like this. Again, we'll see as it unfolds. I'm seeing it as a potential wave three unfolding. And again, one of the main reasons that I'm biased is on towards the downside is because that weekly momentum is still bearish, and the pattern on the macro picture is there's a few other telltale signs. Again, there's no guarantees in this game. We just go with probabilities over here. Then what I would anticipate is some type of wave four and then a wave five to finish off the correction. That's what I am anticipating. So what I want to finish on today is what is likely to happen over the next few days. So if we just delete all of this now, I want to focus, really want to focus on the immediate data, this part of the market right here. If I can just zoom in a bit more, this part of the market right here, right? If this is a wave one of a wave three and then a wave two of a wave three, what normally typically unfolds is a three-wave correction. I'm seeing this as the first wave. I'm seeing this as a second wave because it didn't exceed this low point over here. It's quite deep. And then we should anticipate a third wave to the upside. What you want to be careful of is if this high gets taken out, is that a lot of optimism, short-term optimism may come into the market. But until this particular high gets taken out, the opinion remains the same, still downside movement. Why? Because this is likely to be a correction into this kind of range. And that's what I want to finish on today. So let's just look at that without no emotion. Let's just forget it's Bitcoin for a second. Let's just look at the psychology of the charts. So when you have a movement to the downside, typical corrections are between 50 to 78.6% retracement. Right, these are key Fibonacci ratios, which helps us measure psychology of the markets. So you've got 50%, 62, and 78.6. Right, these are the price zones for the third wave. Also, another key metric is that wave C, which we're seeing as this wave here. Let me draw it out for you, just so it's really, really clear. This looks like a correction of an A, B, C. Right, this wave C often mimics wave A, like it's really, really common, most typical. And we want to go with that probability. So we're going to measure this wave A, or looks like a wave A, unless proven otherwise. And the most common is 100% to 162%, which is over here. So now we have these two very narrow zones. We can get rid of this. We got this price cluster here and this zone over here as well. Now keep in mind, because it's in this uncertainty zone, we don't know if the overall trend for the next few weeks is down or up. That's why the corrections tend to be quite steep. Again, gotta re-emphasize, if the price goes above this zone here, then we need to reevaluate. But until that happens, this is the bias as far as I'm concerned. Now we're going to do a bit of basic time analysis. I'm going to measure how long it took for this wave A to form. And most frequently, a wave C would be very similar in both time and price. And I've put two zones over here, the 100% and the 1.618. Why is this important? Well, it just gives us time and price zones. This one here and this one here. It doesn't mean it's going to hit, but more often than not, most common is that it'll probably go to this zone or to this zone. So I think this zone is going to be more probable, which is more around the 46,000 zone. If it does break above this high, then we just need to reevaluate. And then what will typically happen if this correction unfolds is that the momentum for the next 1 or 2 days may go to the upside. When we get a bearish reversal, if, and the word is if this high does not get taken out, we should anticipate further downward movements, right? So if I just zoom back in here, so you get a nice clear picture. The bias is downward movement like this, something like this. If this low gets taken out, then we can really get a bit more data to say, okay, where is the likely next wave to go down to? Now, the big thing, the big thing and the big question is this zone over here is a key support zone right now. This over here, right? If we do break below it, the next zone is down here. And that's where I think the correction is likely to finish, down here. You know, this wave structure up and then down and finish off what I'll be calling a wave C of a wave 4. It's not guaranteed. It's just what I believe is highly probable. And then on a macro picture, if we just zoom right the way out, get rid of the indicator, if we zoom even further out, what I can see happening is if it unfolds this way, what I expect to happen is new all-time highs this year to hit a six-figure Bitcoin. If not higher. Well, I don't think we're going to go 7 figures this year, but low 6 figures in terms of $100,000 Bitcoin. And then if we do end up breaking all-time new highs with Bitcoin, that optimism will come into the markets. But what I just want you to be aware of is this zone down here. If we do break below, it will probably cause panic selling for the rest of the markets. So we should expect everything to come down if it does. And again, if we do break this high and this high, then we can just reevaluate in a non-emotional, objective, business-like fashion and then make those decisions from that point. So if you like today's content, like, subscribe, hit the bell notification, because I'm just here trying to keep it objective. I want Bitcoin to break those highs because it's phenomenal for the rest of the markets. It's phenomenal for the rest of the altcoins, and it's great for new money coming into this space. But when we're looking at the charts, the beauty of technical analysis, especially when using Elliot wave and Fibonacci, and again, if you haven't, do take my free masterclass because I've created it for you that gives you a real understanding of the markets, because I cover a lot of examples of how we read the markets, and it's based on this. If I just jump back into the YouTube video, it's purely objective. We're looking at ABC corrections, we're looking at wave structures, we're looking at momentum, and we're looking at price, key price zones. And they just typically unfold 50 to 60% of the time. And when we have that information, we must use it. Use all of the information all of the time. That's one of the key traits of any good trader. So there you have it. There you have it. Tell me what you think. I know it's confusing. I'm watching other YouTubers. I don't watch the news that much. I'm just purely basing mine on objective technicals, but I know there is very mixed messages. There's on-chain data, there's off-chain data, there's the news, there's the SEC, then there's the China FUD, and then there's Newpool, and then there's stuck to flow. I get it. It's confusing. So that's why we just need to keep it very, very simple. And on that note, let's finish with a quote. I think it was chapter 5's quote I wanted to read today. Chapter 5. Let me just find it. It might have been chapter 3, actually. Oh, no, it was chapter 5. Chapter 5. We're going with Leonardo da Vinci. Simplicity is the ultimate sophistication. Now, one of the problems with any market, any stock markets, the forex markets or currencies, the commodity markets, like wheat, like juice, like gold, etc. There's a lot of FOMO, fear, greed, optimism, pessimism, and there's a lot of information. And sometimes it's information overload. And some is pointing up and some is pointing down. And ultimately, you want to have a simple strategy which you can rely upon. Doesn't mean it's going to be 100%, but we always go with the probabilities. So if you like today's content, I'm just going to pop over here. If you like today's content, like, subscribe, hit the bell notification. I'm hoping to start some YouTube lives. I've started them in my private Telegram groups. And by the way, when you do my masterclass, you'll see some of my courses are going into a lot of depth to try and simplify this very complex space. And if you buy one of my courses, you actually get invited to my private Telegram groups where we do some bonus content. It just means I can interact with you a bit more and answer your questions a bit more sharpish as well. So again, like, subscribe, bell notification, and I will see you very, very soon.